Ladies and gentlemen, good day and welcome to Valiant Organics Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand this conference over to Mr. Deepika Mralka from Choice Equity Broking. Thank you, and over to you, ma'am.
Thank you, Neerav. Good morning, everyone. On behalf of Choice Equity Broking, welcome to the Q4 and FY23 post-result earnings conference call of Valiant Organics Limited. I also take this opportunity to welcome the senior management team. On today's call, we have with us Mr. Arvind Chheda, Managing Director, Mr. Mike Chheda, ED and CFO, and Mr. Mihir Shah, Senior Finance Manager. This conference call may contain certain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as of the date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. I will now invite Mr. Arvind Chheda for the opening remarks, to be followed by question and answer session. Over to you, sir.
Good morning, everyone. It's a pleasure to welcome you all at our earnings conference call for the third quarter of the financial year 2023. Let me firstly thank Sunidhi Securities for hosting this conference call and also the participants for joining us today. Our CFO Mike Chheda will take you through the financial highlights for the quarter. Thank you. Over to you, Mihir.
Thank you and good morning, everyone, and welcome to this earnings call. I hope you had a chance to study our financial and earnings presentation, which we have uploaded on our website and exchanges. Let me start by briefing you on the company's financial performance on a consolidated basis for the fourth quarter of financial year ended 2023, first followed by the performance of the annual financial year ending 2023. For the fourth quarter, the revenues from operations declined by 22% on YOY basis, but grew by around 8.5% on quarter-to-quarter to around INR 271 crores. The EBITDA was reported at INR 52 crores, which declined by around 8% YOY and grew by around 37% on QOQ basis. Our EBITDA margin for the quarter was 19.27%, which was a significant increase from the same period in previous year and past quarter. The net profit reported was around 34 crores INR, which declined by about 8% on YOY basis, while it increased significantly by 30% over the previous quarter. Our PAT margin for the quarter was 12.53%. For the financial year ending 2023, the revenue from operations stood at around INR 1052 crores, which declined by around 9% on YOY basis, with EBITDA of INR 164 crores, which was down by about 20% on YOY, and EBITDA margins were reported at 15.62%. The net profit stood at about INR 103 crores and PAT margins were 9.75%. On the operational front, quarter 4 financial 23 witnessed a significant improvement in terms of revenue and margins due to improvement in orders from the Telegram unit, which was in recovery mode after the fire incident. There was also some improvement in demand witnessed in dyes and pigments compared to the previous quarter. However, the overall demand is still subdued compared to last year. Margins improved significantly from the previous quarter due to improved operational efficiencies and better input price scenario. Lastly, the PAT production has been around 400 metric tons per month in quarter 4 and is expected to scale up in the coming quarters. With this, we can now open the floor for question and answer session. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Pranay Jain from Dealwealth Securities. Please go ahead.
Good morning, and thank you for this opportunity. A couple of broad questions. One, as per our revenue breakup basis end user industry, what is the outlook that you can provide for dyes, pigments, agrochemicals, pharmaceuticals, as well as specialty? A little bit on the quantitative side besides the qualitative comments, please.
Quantitatively, it would be really tough. So this is Mihir, the Senior Finance Manager. In terms of the end user industries, we look at, we believe so agro is doing fine. Pharmaceuticals is currently one main product, which is PAP. We expect that to grow in this year as our production increases. So that is based on the volume growth we are expecting. So this year, PAP has done somewhere around 200 crores. We are expecting the next year to be somewhere around 250-300 crores. So the pharmaceutical side, that would be a quantitative estimate. Whereas agrochemicals is mainly coming from the Sarigam unit, which was in a slowdown in the previous quarters because of the incident, but we are back to normal over there. So that which agro for now, if Sarigam unit has been maybe around 60% operational, we are expecting that for the year it will be close to 80-85% operational as a capacity utilization. So you'll see some growth coming out of there as well. In terms of dyes and pigments, it's more to do with industry. It's not specific to us. All the players who are in the dyes and pigments intermediates are facing this trouble. We saw some bit of turnaround from Q3 to Q4, but for our products, however, it is still quite subdued. This quarter also remains a bit subdued, but we're hoping that the second half will improve. And so as a percentage share, if you go to see, then pharmaceuticals share will increase, agro share will increase, and correspondingly the dyes and pigments, which right now is at 41%, will probably come down by a couple of points.
Okay. So basis the ongoing projects such as OAP and improving utilization of that and scaling up of other units that we have, it appears that second half is going to have a significant part of your growth, while first half is going to be pretty gradual. So basis this, what is the commentary that you're seeing across the industry for dyes and pigments as well as agrochemical? I mean, especially for your clients, what is the kind of conversations that you're having with them?
So, see, the dyes and pigments, from where I say that the second half seems to be better, that is on the basis of what is coming from the clients. Mehak can probably put in more light on that. But as far as agro is concerned, the reduction was due to our side of incident, and then getting back, there was inventory hold up at the customer's end in the previous 2 quarters, which now we've regained. So agro for us is smooth. We do not see any disturbance there. It will flow as normal what it was at the start of last year. In dyes and pigments, Mehak, if you have any inputs, otherwise this is what I have heard from the customers and the plant interactions.
Yeah, no, what you said is right. So the customers are hoping that from second half of the year there'll be better.
Okay. So what is the contribution that we are penciling from OAP this year and next?
So OAP, we are still taking our time to come up. We are, our trial runs have been successful. However, we are not getting the desired product achievement or yield that we want to. So we are pushing it unless we get that. So right now, I wouldn't be able to comment on OAP. I think probably towards the end of quarter 2 would be a better time to answer on the OAP bit.
Okay. And last question before I get back in the queue. Broadly, what are we aiming for this year on the top line and the EBITDA margin front?
So top line, we are hoping will be somewhere around 1,200. That is what we are expecting with a margin. So if you see our last Q4 margins, we have come up from 13 to 20% EBITDA margin. So we are hoping that such a margin continues. However, on a conservative side, I wouldn't say that we are hoping for our standardized margins, which were somewhere around 22 to 25. I would suggest or I would hope that it at least remains around the 20% range.
Okay. Thank you. I'm wishing you all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, hello. Yeah, good morning all. Thank you for taking my question and congratulations for a good set of numbers. So a couple of questions from my side. One is obviously our Saigram plant is back on track, I think. So still for this quarter, the volumes were slightly lower. So possibly, I'm just assuming that by Q1 we will be back to that earlier run rate of that coordination segment. Secondly, in the hydrogenation segment in this quarter, there was a significant volume decline on Q-on-Q basis. So just wanted some clarity there.
Sorry, I'm not able to clearly understand what you're saying. Maybe put your mic a little far away.
Yeah. Is it okay now?
Better. Yeah, please go ahead.
Yeah. So my question was just on the hydrogenation segment that volume in this quarter was down on Q basis. So is there any specific thing or there is a decline in PAP volume as well? And I mean, I just wanted to understand as we are talking about improvement in PAP volumes and then in what respect this hydrogenation volume was down on Q-on-Q basis. And thirdly, looking at the realization for some of the segments, it looks slightly lower also. So just wanted to understand that margin we have seen in this quarter, it is from where it is actually coming from. If you can help us to understand.
Sure. So let me just, since your voice was a little unclear, I'm just repeating your question. You want to understand whether growth is coming from in this quarter because your price realizations seem to be coming down, and also the PAP production seems to be flatline. So your question is where is the growth coming from? Am I correct?
Yeah, to some extent. And in this chlorination segment, as we are back on track with this Saigram plant. So can we expect from Q1 the run rate would be similar to what it was earlier?
Okay. Yeah. So to answer your second question first, yes, we do expect almost a full recovery from Saigram unit for the quarter and coming beyond. But however, prices have corrected itself across all our products. So volumes will return, but the prices what were last year may not be at the similar levels now. But the correction is not drastic in terms of the chlorination products. Coming to your first question, which was the PAP. PAP prices have corrected. Hydrogenation overall volumes have gone down, but please understand it's a big basket of products. where there are agro, pharmaceutical, and dyes and pigments, all products in that one basket of hydrogenation. So there were a couple of dyes and pigments products which were down, because of which the overall hydrogenation as a volume seems to be lower. But PAP contributed to a certain extent, but of course it did not bring it above the previous quarters, and that is because of the overall dyes part. Coming to the growth in this quarter, it is mainly the volume growth coming out of Sarigam. Sarigam recovery was a key driver to this. From the previous quarter to this quarter, dyes and pigments, some bit of improvement was seen at the Tarapur plant. So there was some volume growth there as well. But in terms of price realizations, all have been lower than the previous quarter.
Okay. So this margin expansion is the outcome of fixed cost recovery from this Sarigam plant, or is there any other factors also which have contributed to this?
Sarigam plant, yes, mainly that, but we've also streamlined our operations to a certain extent. So the PAP plant also, even though there was a price correction and volume has remained stable from the previous quarter, we have managed to bring some operational efficiencies, because of which our variable costs have fixed costs have been able to absorb there. So these two units have brought in the margin accretion to the overall basket.
Okay. This kind of margin effort.
Rohit, sorry, we lost your audio. Can I request you to come in a better reception area, please?
Hello. Yeah, am I audible?
Yes.
Yes. So can we expect this margin rate for FY24 as well?
We are hoping to, yes. We are hoping to be in that 18 to 20% margin for the year coming in, for the year FY24.
Okay. And one last question just on that PAP continuous process thing. So how we are placed there and what we are expecting?
So like I said last time, I think last earnings call also, we are continuing with batch process. We may make it a semi-continuous process, maybe, but for now the full continuous process we are not going ahead with that. But having said that, we are bringing in some changes in the technicalities or in the terms of process engineering, but we are in line for the full absorption or the full production by end of this year.
Okay. Thank you, and best of luck.
Thank you.
Thank you. Participants, you may press *1 to ask a question. Next question is from the line of Kaushik Mohan from Ashika Stock Broking. Please go ahead.
Hi, sir. Great set of numbers. Congratulations for that. My question is on PAP. So currently, what is your volumes in the PAP, and what EBITDA margins, and what is the current price that PAP is currently trading at?
So we do not generally give product-wise breakup, but in terms of PAP, I can share some bit of clarification. The current prices in the market are somewhere around 450 to 500 in the range of that. And volumes are, as per the presentation, the most part of it. So we have done around 400 tons per month at an average in the last quarter. We are hoping to touch around 500 in this quarter, and then gradually go on to 600 and 700 by the end of the year.
Got it, sir. And sir, are you expecting any price increase on PAP prices? And how much percentage will we import from China?
No. So as far as pricing is concerned, the PAP prices are correcting itself, so we are not expecting them to increase. We are hoping that it remains stable. but there may be some further correction of around 10% or so, won't go further down. That is our expectations. As far as import from China is concerned, I don't have enough knowledge on that. Mahek, if you could share on that.
So the imports are continuing only from China currently, as there is always a shortage of material in the market from the Indian suppliers. Coming to the prices are correcting itself drastically. So now, as Mihir mentioned, it's around between 450 to 500. Now it's somewhere around between 400 to 450. So we are seeing a correction in the prices.
Got it, sir. Thanks for that, sir. I'll come back in the queue.
Yeah. Okay.
Thank you. Next question is from the line of Shrishti Jain from Monarch AIF. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, with China reopening, which segments do we feel that, there will be a major challenge now that China is coming back, maybe price-wise or volume-wise?
Mike, I'll have you answer this. It will be better.
Yeah, so this China coming back, the prices are going to correct itself 100%, but the demand is something which is very key right now, because some of the sectors are not picking up as we were expecting it to pick up, and the second half of the year for dyes and pigments is something that the customers are telling us that it do well. So question is right now, is the demand should sustain itself?
Sure, sir. But on the chlorophenols part, we don't expect significant impact of China reopening, right? Is that the correct understanding?
No. Yeah.
Okay, sir. Thanks. Sir, and on the PAP front, when do we expect to move towards continuous manufacturing?
So, like I said, we are not looking at a full continuous process. Now we've changed that to a batch process. Right now we are going forward with batch and expanding with batch. However, so there are it's a two-step process. So a part of it is continuous, a part of it is batch. So we are calling it as semi-continuous now. But for all practical purposes, it's not a continuous but a batch process. So we are moving forward as batch only and not full continuous.
Understood, sir. So with semi-continuous process, what can be the peak volumes that we will be able to do in PAP?
So we are still aiming to get the 1,000-ton capacity per month. Of course, with the 80% or 85% utilization, optimum utilization. So you can assume somewhere around 800 metric tons a month.
Understood. Sir, any comments on the competition in India with respect to PAP? How are they faring?
So the scenario remains more or less similar. Not much has changed in the previous quarter. There are a couple of small players. There is a new entrant of a big player also. But as of now in the market, there is enough demand. Whatever we are producing, we are able to sell. So that is not a problem. And also we have a subsidiary that takes up most of our PAP. So our concern is mainly towards the leftover portion of our production. So maybe just a 15 to 20% of the production that we are selling in the open market. Otherwise, most of our product is taken by Valiant Laboratories.
Sure, sir. Thanks. That's it from my end.
Thank you.
Thank you. Next question is from the line of Pawan Kumar from Ratnatra Capital Partners. Please go ahead.
Sir, first thing on the hydrogenation side, the volumes have increased, but at the same time, even the realizations seem to have gone up. So is it the product mix or what exactly is causing this particular divergence? And from hydrogenation side, should we expect any kind of recovery on the realization side? How do we look at that?
So on the chlorination side, yes, the recovery is coming not because of the product mix or anything new. It was a slowdown which had happened because of the fire incident that we had in quarter 2, and then inventory built up of the customers. So our recovery was a bit slower. Now, Sarigam, the chlorination unit is back to normalcy. So hence you see the positive movement from Q3 to Q4. And the current quarter also, you will see some better growth in chlorination because the plant is coming back to normalcy. As far as hydrogenation is concerned, there are two main aspects that affect it. One is the PAP volume, and the second is the dyes and pigments industry, because many of our hydrogenation products are again for dyes and pigments intermediates. So once the recovery in textile is seen, you will see some positive movement in the hydrogenation segment. However, as PAP grows anyway, there will be some addition to the volume as we move on.
Sir, but why have the realizations actually gone up on the hydrogenation side? That was my question. Yeah,
so it's a basket of at least 20-25 products. So on an overall level, when we see most of the products realizations have come down. Just a couple of them which have gone up, and because of that you see this particular price realization where you see the price have increased, but more or less the majority of the products, the realizations have gone down.
Okay. And on the chlorination side, in terms of normalization, should we expect volumes in north of say 4,200, which we were doing last year?
Yeah, we would be more or less similar to what we've done last year.
Okay. And on the PAP side, sir, is it now given that our peak capacity would be around 800 metric ton per month, is it?
Capacity would be 1,000 metric tons, but we would work at 80-85% optimum capacity utilization. So you have to put that factor. We can't operate at 100% capacity.
Okay. And can you just give us an idea of what might be the realization drop overall in the portfolio going forward this year?
Going forward? Very difficult to predict, sir, because so many different products going into different industries, which moves what is different. So the major correction happened in dyes and pigment products. There's a correction happening in PAP, but not so much in chlorination. So very difficult to give a number for that.
Okay. And one last question I would like to squeeze in. So when we are taking orders from the customers, is it like we try to make a fixed gross margin per kg or EBITDA margin per kg, or how do we operate? Because when the realizations have dropped, actually the margins have gone up.
So one of the factors here is that our contracts are quarterly, so there is a lag when this happens. So when the contracts are being negotiated, we actually put it as a through pass-through cost. Or most of our costs are a pass-through to the client. But if anything happens in that quarter and the raw material prices go down,
त्याने तुमच्या कॉलला होल्डवर ठेवला आहे.
Yeah, so I was saying that, so because of that lag in realization, we also, so a year and a half ago, we were facing the other side where our contracts were at a lower price and the raw material prices went up, so our margins were getting squeezed, and now the opposite is happening.
Is there any part of inventory gains this quarter, sir?
Sorry, could you repeat?
Is there any part of inventory gains because of the raw material, this particular quarter?
There is some bit of inventory gain because of the build-up, but Not so much. I wouldn't say it was a significant on the inventory side.
Okay. Thank you.
Thank you. Next question is from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So I just wanted to know what is the capex plan for FY24 and FY25?
So we go year by year. For this year, we would be somewhere around 100 crores again. We maintain that standard. Some 110 crores of capex we add in each year for the growth. Nothing major, nothing as big as a PAP that we did or pharma intermediates that we did. So everything will be more of brownfield. So we're looking at adding some new products in the chlorination segment. We're also contemplating some bit of product addition in the ammonolysis segment, but nothing major. However, overall, 100 crore assumption should be okay.
Okay, sir. And sir, what can be the revenue expected from the pharma intermediates plant and the OAP plant in the next 2 years?
So, in terms of PAP, once it's at full capacity, we are hoping it to be somewhere upward of 300 crores. For next year, we are still in the scaling up business, in the scaling up phase. So somewhere less than 300, so between 250 to 300 crores for this year, and 300 plus for the year after. OAP, I'm not in a position to comment right now because we are still, trying to achieve what we desire. So once that comes in, at that point, what is the market and what the price point is, we'll be able to give you a better information only around that time once we commercialize it.
Okay. And what the pharma intermediates plant, sir?
Pharma intermediates, so we are expecting to have somewhere around 65 to 70 crore of top line. But that will continuously change because it's a multi-product plant, and it can have somewhere around 12 to 15 different products, with all of them being in a different price range. So that will keep going up and down, but on an average 70 crore top line could be assumed.
Okay, sir. Thank you. That's it from my side. Thank you, sir.
Thank you. Next question is from the line of Saumil Shah from Paras Investments. Please go ahead.
Yeah, thanks for the opportunity. My question is in terms of our capex, which we did for last, say, 3-4 years.
Mm-hmm.
So what would be the peak revenue potential from the capexes which we did?
So peak
doing any further capex?
Sorry, your second part was missed.
Assuming we are not doing any further capex.
Correct. So with the existing capexes that have already gone in, we like I said, with PAP, we are hoping to be somewhere around 300 plus at its peak. OAP, I'm unfortunately not able to provide an answer at this point. Pharma could be at around 70 crores at peak on a full year basis. Mm-hmm. And then everything else is in Ahmedabad, where we are again doing some redevelopment that could add another 10-15 crores. So it would be somewhere around 60, 70, 80 crores of Ahmedabad as well, while the others will remain constant.
Okay. And we did a capex of say around 400 crores in last 3 years, 3 to 4 years.
Yes.
Okay. And just a reassurance, you did mention that the revenue guidance for this current financial year for standalone basis would be, say, 1,200 crores?
Yeah, correct.
Previous participant?
Yeah, 1,200 crores on a standalone basis for this year.
So we are assuming, say, 30 to 35% growth for this current financial year?
Yes.
Okay. And so since we have already passed we are into the end of May. So how is the current quarter shaping up in terms of demand and overall business look?
Mike, if you would take this one.
Sorry, can you repeat the question, please?
Since we are already into the end of May.
Yeah, go ahead. Samir, you can go ahead.
Yeah, since we are already into the end of May, so how is the business shaping up in terms of demand and overall outlook?
Yeah, so like I mentioned earlier also, right, the demand for some sectors are not doing well, but for like agro, it's constant, it is stable, so it's on track. But there are some sectors which are not doing well as currently. So we are hoping those become better over time and we get some additional revenues from there also.
Okay, but the demand is better than the Q4 demand which we were seeing.
Yeah.
Okay. And any plans for the debt reduction for current financial year?
Yeah, so debt will be the repayment, as per the repayment schedule, about close to 40-45 crores will get repaid in this financial year. We do not have any immediate plans of raising more debt or raising any more term loan. So yes, overall debt you will see it come down.
Okay. So the current capex would be from the internal accruals, no further.
That's the plan for now. If and when if we feel the need to raise more debt, then we will look at that option.
Okay. That's it from my side. All the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, what were the revenues from PAP this year?
Sorry, what was the?
What was the revenue contribution from PAP this year?
This year was somewhere around 200 crores, 200 to 210 crores.
And we are saying that this number will go to 250 to 300 crores this year, is it?
Correct.
Okay. And what is the volume growth we are expecting, sir? In the sense, is it 50% or what is the range?
So we'll be scaling up month by month. So I cannot give an exact volume growth, but what we are hoping is that by this quarter end we touch the 500 mark, and then touch the 600 mark the quarter after that, and then eventually reach the 700-750 mark by the end of this year. So we are hoping to move that way, but how and when that will actually happen is, I can probably give a better idea as the year progresses.
Okay. And on the dyes and intermediates parts, I understand that the industry has been weak since last 3 or 4 years. So what do you think is the structural issue there? Is it, I understand the demand is down, but it is pretty odd that it has been down for such a long period, right?
I don't think I would say that it was down for 3 to 4 years, because we did see a good year last year in terms of our products, at least dyes and pigments intermediates which went into textile. But for our products, it wasn't a bad year the previous year, but this year was low. And the main contributing factor here is the demand from Europe. Because of the geopolitical issues there, the demand is low, and hence, although we are not directly exporting, but our clients are dependent on the European market. So from that perspective, Europe was the key reason why the demand was low. But with Europe also now better than what it used to be in terms of their condition, I think the demand will open up towards the second half of the year.
But I thought European market was more agri-specific. Is it more of textile specific?
No. It could be agri-based overall, but as far as our products and our customers are concerned, they are relying on Europe as a market. So I am not commenting on an overall textile or overall dyes market. I am commenting on our product-specific exposure that we have to Europe.
Okay, sir. Fine. Thank you.
Thank you. Next follow-up question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Thank you for the follow-up, sir. One thing on this analysis side, as volume is significantly there on Y-on-Y also and quarter-on-quarter also. So, are we seeing some kind of recovery in the textile side, or I believe this analysis is largely catering to the textile industry. So just wanted to your thoughts that the recovery in volume is pertaining to which industry recovery?
So recovery is with respect to one of our unit having, so our Q3, the demand was low, significantly low, so we had build-up of our finished goods. However, Q4 we were able to sell that, and hence the jump. So basically the Q3 demand, which was significantly low, was seen as an improvement in Q4 at the start of Q4 itself in January. So January demand was a little up as compared to Feb and March in terms of analysis. So maybe just the movement in that 1 month, which is giving that that spike. But if you see on an absolute basis, is not a very significant number. But having said that, it is, so we have only 2 products in analysis, PNA and OCPNA. The PNA product is what is giving this positive movement.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah, thanks for the opportunity. Can you throw some light on the new products which are being developed and expected to be commercialized in FY24 and FY25?
So new in terms of new, one is OAP, which we've already been trying to commercialize, but we are having some issues. So that is one product that will we are hoping that become successful and we are able to commercialize. Second is there are a bit of chlorination products, 2-3 chlorination products which we are looking to get into, but at this point I would not be able to disclose it. But probably a quarter later, once it's online, or once we have some more clarity, I can share further details. But right now, unfortunately, I will not be able to share.
So, and the 110 crore of capex that we are planning to do in FY24 and maybe FY25 as well, what kind of asset terms can we generate from it?
So these are not specific to a particular project. They are a lot of most of it is some redevelopment. Some of them is maintenance capex. So I cannot put a number as such on a asset turnover because it's not specific to one particular project.
Okay, but will this lead to increase in our capacities or for a particular product, or these are mainly maintenance and refurbishment?
It is mainly a big chunk of it is maintenance, ETP, improvising or debottlenecking of existing products, and a partial portion is towards a brownfield expansion.
Okay, but this debottlenecking and brownfield expansion will lead to some existing capacities being added.
Correct. It should lead, but I don't have that clarity yet.
Sure. So, when this OAP stabilizes and PAP also reaches stable capacity utilization along with the other capacities that we have, what kind of revenue can we generate from our existing facility in, let's say, 2-3 years?
I think with no further capexes, we can still be in the range of 1,300 to 1,500, 1,300 to 1,400. So that is its peak revenue generation from the existing. Once we grow these bit, probably another addition, like a 50-60 crore addition. So we are hoping that at least by end of 2 years, we should be in that 1,450-1,500 range.
Sure, sure. And what products will you be supplying to Aarti Pharma Lab and Pharma Intermediate? When are they expected to be supplied, and are they patented products, or these are generic APIs only?
So Aarti Pharma Labs, we've already started. So we commercialized our plant in February. So we've already started selling to Aarti Pharma Labs. These are specific to them, to their requirements. So they are patented. I'm just using the word patented to say that they are specific to Aarti Pharma Labs. But having said that, there is no such structure that we have to only cater to Aarti Pharma Lab. If we can produce different molecules, we can sell outside as well.
So, but this particular intermediate that you are supplying,
that has to be to Aarti Pharma Lab.
And that is for a patented product that they will be making.
That I don't know. We just get code names.
Sure.
Yeah.
And the chlorination capex that you plan to do, that you had told in your previous answer to the previous question. So normally what we understand is chlorination is a relatively higher margin segment. So can we expect that the margins, what are the normal margins in the chlorination segment, given the prices would have also declined there? So, and the new product that we plan to launch on the chlorination side, what can be the margins that we can generate from it?
So we unfortunately don't get into the margins of the segment due to proprietary information. We don't give out that, but you can study some past movements last 4-5 years, and you'll be able to better judge the actual margins that we've achieved in chlorination.
Sure. My last question was on the overall margins. As you were stating in your call that the decline in realization was not passed on to the customers in this quarter. So let's say in Q1, if it's passed on, will this lead to decline in our margins?
I didn't follow.
You talked about, you said that although the price of raw materials have fallen, but there is a lag in passing of passing on the prices of our raw material to our customers. So let's say in this quarter, Q1, let you pass on the decline in raw material prices to a customer. Does it mean that our margins are expected to reduce in Q1 and Q2?
So logically, yes. Once the contracts get renewed, it will be at the newer raw material prices. But we our margins will not further squeeze, because what we are looking at right now is recovery from our already squeezed margins because of different factors. Not just the contractual lag factor, but other factors are also there. There was a top line fall. Overall efficiencies were down at different plants. Putting all of that together, we are expecting our margins to remain stable rather than getting squeezed.
Because if you look at our quarterly numbers in June 21, this is the highest gross margin that we have done since that. So it was. This is not the only factor. There were several other factors also that played a role, like the fire incident. So because of that, the whole contribution from a unit was disappeared. Then along with that came the dyes market coming down. So a lot of margin squeeze happened there. So the previous quarters were, in fact, probably the worst for Valiant. But this is now in recovery mode. Even with the correction in the raw material prices passing on, it will still not squeeze to a great extent. So what kind of margins can we expect for FY24?
We are hoping to be in that 20% range. So 18 to 20% should be a fair assumption.
Sure. Okay. Thank you, Nish. All the best.
Thank you.
Thank you. Next question is from the line of Ketan Shah from SHCIL Services Limited. Please go ahead.
Good morning, sir, and congratulations for good set of numbers.
Thank you.
Yeah, one is regarding dividend. Why there is no final dividend? And second is regarding any expansion plan in our subsidiary. Thanks.
Sorry, what was the second question?
Any expansion in our subsidiary Valiant Lab?
So let me answer the second question first. For the dividend, I would request Arvind sir to probably shed some light. But on the second question, Valiant Laboratories directly is not expanding. So the paracetamol business, they're not intending to expand much, but they also have another subsidiary, which is Valiant Advanced Sciences. That is the subsidiary that is looking at expansion into a different product category. But I cannot give any further detail because that's a different management. I cannot shed more light on that. But they are looking to raise funds to do this greenfield project in the subsidiary.
Is they planning to come out with a public issue?
Yes, they have given that intimation through, I think, in the previous quarter.
Okay. And what about dividend, sir?
Dividend, Arvind sir.
Regarding dividend, I tell you, because we are suffering from 3 quarters, margins were squeezing, so we are very conservative on distribution of the profit. So we declared 1 rupee only. In the future, if the things improve, so we can give more also then.
The current last quarter is also better. Working is also good. Then why?
No, but overall, if you see the whole year performance, it is almost 26% less.
Even there is no expansion plan. No, there is no capex.
No, recently we don't have any new capex here.
Yeah, then.
But the loan repayment is going on. Plus the profit has also decreased by 26% YOY if you compare. So we are conservative in distributing the dividend.
Company don't have any dividend distribution policy.
See, the scenario was not that good this year because of the European situation and our fire incident also. So we cannot take more risk on distribution. When the times are good, we are paying good dividends also. And if the things improve, we can again give more also.
That is okay. But you should have some basic people to distribute certain amount of the profit to the shareholder also.
Hello, can you repeat the question?
You should have basic principle to distribute certain amount of the profit to the shareholder also.
No, that we were always having, but last year was the exceptional case,
Yeah, but current year also, previous year also, last year also, you have just distributed 1 rupee. That you should have.
We'll get back to you and we'll think over it.
Policy in future, please.
Ketan, sorry to interrupt you. I'll request to join the queue again for a follow-up question. Next follow-up question is from Srishti Jain from Monarch AIF. Please go ahead.
Hi, thank you for the follow-up. I just wanted to understand that this pharma intermediate, firstly, the peak revenue that we're expecting of 65 to 70 crores that we're expecting in FY24.
So that will be in a phased manner. That I'm expecting on a full year basis. So for FY24, that may be a little less, say somewhere around 55 or so.
Oh, understood. And we've had, I'm guessing, very negligible contribution from this, from pharma intermediates in FY23.
Yeah, very hardly anything.
Understood. And which segment will this be a part of going forward?
Hydrogenation.
Hydrogenation.
Because it's in the unit there, so it will be a part of that. We'll categorize it under that category, hydrogenation.
Sure, thank you. And another follow-up, so with regards to, now PAP being a semi-continuous process, will we actually, so we were expecting PAP's EBITDA margins to be in the 20-22% kind of range. Do we expect now it to be in the lower range, or we expect to maintain these kind of EBITDA levels?
At the company level you are talking about, right?
No,
20 to 25.
PAP specific.
No, so we've never commented the EBITDA range for PAP specific. On a company level, we are hoping to be around 22 to 25% range going forward. Not this year, but that is what we aim to have as a standardized margin that we want to be in.
Understood. And for if you want to take for the next 3 years, the aim would be to get back to the 25% EBITDA margin?
Correct. No, higher probably not because it will be very difficult to actually comment what would happen 3 years down the line with the prices. But given the current scenario, so earlier we used to have lesser products, so it was different. Now our product basket have increased, our operation scales have increased, so our costs have also increased proportionately. I wouldn't say that we'll go beyond 25 EBITDA margin as such, unless something new addition we put in, which is significantly EBIT margin accretive. But for now, given the scenario, I think 22 to 25 is a good assumption. I wouldn't go beyond that.
Understood, sir. Thanks. That's helpful.
Thank you.
Thank you. Next question is from the line of Parthiv Shah from Tracom Stockbrokers. Please go ahead.
Thank you for taking my question. Congratulations first on very decent set of margins. So my question is regarding your cash flows. So this year probably we have generated cash flow from operations of around 182 crores. Assuming that next year you do something like say 200 crores or even better. You mentioned that 100 crores will go into capex. So will the remaining 100 crores go to repaying the debt? Because this year I think we've repaid less in terms of long-term borrowings of 35 crores, and I assume the short-term borrowings of 50 crores have been repaid maybe thanks to the softening of the raw material prices. Is my understanding correct?
Correct. That is right. So we are repaying a term loan which is in sync with the schedule. So two of our term loans started the repayment in this year. So there was a moratorium period. One of the term loans repayment started in September and the other one started only in December. For next year, we will be repaying all our existing term loans. So the repayment for all of them will have a full year cycle of it. And that comes to around 45 crores or somewhere around that figure of repayment.
So next year also around 45-50 crores, not
next year,
100
I'm
crores?
talking about next year's repayment, 45 crores being next year's repayment.
Okay, it won't be more than that?
No.
Okay. And so what are the current prices of PNCB?
Current prices somewhere hovering around 100.
Okay. So that is a comfortable zone for you to make reasonable spreads in your PAP?
Yes.
Okay. And so approximately by when do you expect OAP to stabilize? And as I understand, part of your OAP will also go into further downstreaming of products. So if that stabilizes, it will be margin accretive, though a small number in terms of volume and revenue.
Yeah, so it will be a small number in volume and revenue, but unfortunately, I'm unable to give you how OAP is going to happen, because if you just recap a little, we've been trying to get this product up and running since a couple of quarters now, but we are facing some trouble. So let's see. Right now, I do not have a very strong comment on when it will start, but maybe another quarter and we'll know better.
Great. And so last question is on debottlenecking that you just mentioned. So like currently Saragram is doing well for you in chlorination. So if you were to think of debottlenecking that plant, how much amount of capex you would put, and what could be the capacity enhancement from there?
Arun sir, if you want to take this, it will be better placed.
See, we can increase it by at least 15% in chlorophenols, and secondly, we are starting 2 new molecules in chlorination, so that is also going to add over there.
Okay. And so, any development in terms of like I'm hearing that Atul is expanding its chlorophenol capacity. So with that coming into the market, do you see a supply-demand scenario getting disrupted for you all, or you feel there will be adequate demand to absorb this capacity as well?
See, there are already 5 plants in China also. And Atul is already making 2,4-DC for many years for their 2,4-D production. So they may come with some in monochrome also. So let us see. No?
Sure.
We can compete them also. There is no problem.
Great. Okay. Thank you, sir. Thank you for answering my question.
Thank you very much. I now hand the conference over to the management for closing comments.
Thank you all for participating in this earnings call. Let me first make a correction about our opening statement and thank Choice Broking for hosting this call. We erroneously mentioned the wrong name in the opening. Lastly, I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know any more about the company, please reach out to our investor relations managers at Valorum Advisors. Thank you.
Thank you very much. On behalf of Choice Equity Broking, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you, everybody. Thank you.
Thank you.